don't really consider myself a mortgage agent. I consider myself as a networker.
All right, welcome, Pankaj.
Thank you very much, Ryan.
Do me a favor. Tell me who you are and what you are involved in a quick little time.
Yeah, I would love to share more, and thank you for giving me this opportunity. I would describe myself foremost. I am a very passionate and a positive guy at heart, and as a profession, I'm a mortgage agent. But I don't really consider myself a mortgage agent. I consider myself as a networker and somebody who loves talking to people. So that's how I lead my day to day. I connect with people, I solve problems, I identify problems, I identify people who solve those problems really well, and I mix and match them.
I'm a similar person as well.
Yes. So, and I happen to be in mortgage industry, very blessed, and I have been working closely with realtors, construction companies, and builders, and lawyers, and just building that mesh of ecosystem and identifying opportunities for myself in that.
Amazing. Just a short side note. You were talking about your drink there.
Yeah.
Okay, tell me about it quickly.
Yeah, so I have been trying mud water last, I think it was 2 weeks now. Funny story, like, and relating to something we were talking earlier, how marketing is kind of influencing and dictating our decisions so much. So 3 months back, one of my really good friend told me about mud water, and we were traveling to Costa Rica, and he said, oh, there is this thing I have been alternating it with coffee, and it's pretty good. And the name was mud water. And right away I was like, mud water? Like, is it mud? He's like, no, it's a blend of mushrooms and some spices. And 3 months back, I came across this idea, but I never looked up. And here's the funny thing. My phone somehow figured out that I need that, and it started showing me the advertisement consistently over Instagram, over Facebook, and I kept looking at it. I'm like, this is stupid. Like, I don't want to buy it, and why are you showing me the advertisement? So it didn't stop. Last month I was in California. I go to this restaurant in Venice. I see mud water on their menu. I'm like, hey, let me try this. And I tried it. While I was trying it, the server gave me a little bit of rundown. He's like, I've been trying this myself. It's an alternative to coffee. It's 1/7 of the caffeine as you have in coffee, but it also has a lot of mental benefits because it has like black pepper, it has cloves, it has like cardamom, it has like a lot of spices, turmeric, a lot of different sort of mushrooms. So all blended in, and you put it in a hot water and you drink it. And I've been noticing much more clarity in terms of my goals, my day. Like, I feel like coffee was making me a little more jittery, and this is more like much more focused energy. So far,
amazing.
Highly recommend it.
So I should try it.
Definitely.
How does it taste? Is it
It doesn't taste actually bad. It's really good. I took a chai flavor, like, so it tastes like a chai. You can like put oat milk or anything in it, like sweetener and stuff. So
I'm addicted to this. Anyone they know me,
Yeah.
This is all I drink.
Yeah.
But
so that's what I've been trying.
I'm going to try it. So anyway, let's talk about mortgages.
Yeah.
Obviously, there was an article that just came out about fraud. Give me your take on that article. I didn't think it was I thought it was terribly researched, and I didn't think it was telling the story, but I'd love to hear your take, and if there will be any changes.
Yeah, I think I've been in my mortgage industry for last 6 years, and I have always observed and noticed that these situations do happen. And I've always like come across clients or referral partners who have asked for such sort of help. Luckily for me, my mentor in this industry, the first rule he gave me was, Pankaj, this is a license to print money, and the only person who can destroy this license is you yourself. And that's going to be by making decisions which doesn't align with who you are. And for me, when I joined mortgage industry, I was before that I was an immigrant, and I was coming from India, where the financial markets were a wild west. So we were kind of famous, notoriously famous in banking and finance there to make things work for people. And I guess that's the tradition and the culture most of the people who are immigrating come and bring here, where they expect that you can make anything work as long as you know right people and right money. So for me, because I was exposed to it, I made a conscious choice that I don't want to engage in these such sort of offerings, because there is no surety, because you don't control the process. You are basically like working with the different parties and hoping, fingers crossed, that it'll work. So I wanted more of a control of my own clients and their decisions and the outcome. So I decided not to pursue that path. But I have been privy to a lot of colleagues and people who are engaged in these such sort of activities. And my personal take on it is that deep in the system, a lot of high executives and a lot of banks, they know about this. In fact, I've heard things from pretty high up executives that as long as the mortgage doesn't default, we don't care. So I guess that's the attitude which has been there for a long time. And for one video, that too with a low hanging fruit, like you targeting South Asian community,
Exactly,
and
yeah.
it's like most easier thing, like 8 out of 10 of those people are going to say the same thing. So I don't think that was totally justified, and a lot of people in this industry spoke about it as well. But it is definitely something eye opening for people, because there are repercussions to it, right? Clients cannot qualify again. So I think what we personally feel, it makes our position much more stronger. Before, when we were saying no, we were feeling hesitant because we knew that this client is going to go somewhere else and get the mortgage. Now, if we obviously we feel way more empowered and confident to say no, and we can relate or kind of tell them, hey, look, that's what's going to happen. Maybe 5 out of 10 times, but you don't want to be that 5%.
Exactly. And the stress test has made it hard to qualify even people who can afford the property.
Exactly.
Now, I think, though, there are new options.
Yeah.
Instead of taking the fraud route, can you talk about other options?
Yep. So some of the other options we have always proposed to clients is that when we are looking at fraud options, basically we are trying to bridge or mitigate the gap there is in qualification. So we are trying to expedite their qualification and figuring out what's the solution. But in a real scenario, everybody can get qualified for a mortgage. The problem people face is that there is expectation they have that I want the best rate. I want AAA client, bank. And what we have done in the past, and we continue to do, is paint a real picture to the client. That, Mr. Client, you are self-employed, you make way more money than you actually claim. So you are saving on a lot of taxes for a number of years. And now, when it comes to qualification, you are only going to get qualified for this higher rate mortgage based on your situation. But if you are going to demand us to get you a bank rate, that's not going to happen. And for us to make that happen, there are high chances that it might get declined. So it's like it makes our position way more stronger to defend what we believe in and give them private mortgage solution or give them a B mortgage solution. Something we have started discovering recently is a lot of clients can get qualified for the bank if they have a smaller mortgage. So rather than bring 20% down, we are offering them a 50% mortgage from the bank and then bringing a 30% private behind the bank with bank's permission, so that we can slowly start chunking away that private mortgage and then convert it into a homeland credit. So that rather than going in a full private mortgage, clients can actually take benefit of most of the mortgage in a better rate and then a small second behind. So that's
So they
another
can
strategy.
still afford that house.
Yeah, they can still afford that house.
And it may be challenging for the first 2-3 years, and then they're in the A rate.
Exactly. So if there is a plan of action, and there are multiple stories we have where clients started in a private, we slowly transitioned them into a B lending mortgage, slowly we transitioned them into a mortgage. The challenge I find why that doesn't happen enough times, and we have been guilty too, that as mortgage agents, as realtors, we are commission based agents, and we always are looking for the next hunt, and we are always getting busy, and the process of transitioning a client from bucket to bucket takes a lot of work and effort, right? So a lot of people get busy in next transaction and they forget about the client. So that's where we have tried our best to build a relationship, build a back office team where we are continuously monitoring their credit, or we continuously monitoring their habits or their spending or their income, or a set plan of action which takes them to different bucket, a B lender and a A lender.
Amazing. So obviously, affordability is more of a question now because of the rise in the interest. Where do you think that is going to end up in the next 2-3 years compared to how we are now and how we were a year ago?
Like I've been noticing and watching real estate market for last 8 years. I think it has been the craziest in the last year and a half. One of your colleagues was sharing earlier that we were in an abnormally high market and everybody was getting used to it, and now it's becoming normal. And I think this normality will continue to go for the next few years. I definitely think there's going to be a rise of modular homes. The construction prices are going to definitely have to come down. The traditional way of construction has to evolve for the prices to be more adjusted, and I think that's how the affordability is going to align. I don't see that Canadian wages are going to go double to align with the housing crisis we have, but I do think there's going to be more creative ways of financing, whether it's a bundling. Banks will offer that where you have a 60% mortgage in a A rate and 20% mortgage in a C rate, whether it's like the cost of the house is low because it's modular, whether it's the sizes of homes, whether it's more opportunities of joint tenancy. Like we have seen people like single friends, and now they are jointly buying real estate rather than one person buying. So
I was
that's
actually talking about that yesterday.
yeah, so that's starting to come up. Like we see like three really good friends trying to buy their first property single-handedly. They can't achieve it, but three of them can do it. There are ways to like make a contract with a lawyer and the back of the scene. So there are different things. I think it's evolution. I think we are going through a period where we are going to come out and we're going to evolve. We're going to look at different ways of doing business, different ways of positioning our products. And we were talking about, even I feel like a lot of people are getting exposed to private mortgage investing opportunities, and there is definitely a rise in funds available, which brings the cost of private mortgages definitely down.
Talk about that for a bit. I think that most of my clients, that would be extremely strange to them. It's not something that they had ever imagined. They just earn their cash and they put it in an index and earn the S&P. So I'd love for you to talk about those options and how easy it is and how risk averse it can be to where it's much lower risk than in the S&P index funds.
Yeah. So a little backstory. So I come from investment world. I worked as in investing in stocks, mutual funds, and commodities for 8 years before I came to Canada. So I am familiar with the investment space. And one of the most exciting things I find about investing in mortgages is that it's a secured asset. Most of the people, I wouldn't say most, a lot of people don't understand when we invest in mutual funds or shares or stocks or crypto, there is no underlying physical asset. Like it's I like to say it's an air. Like I invest in a mutual fund, which invest in a stock, which invest in a company. I don't know anything about it. I'm just trusting the previous past track record of that index. But when you invest in private mortgages, you actually know where your money is going, which asset is it associated with. One of the biggest advantages I see investing in mortgages is that you always have an asset, which means even if the asset depreciates, rental income goes up, you still have some sort of stake in the game. Your money is not invested and it goes in puff in a year. Even if real estate market crashes 50%, you still own an asset. You still have a physical. So that's what I see. One of the biggest advantage is the security of the principal. The interest rates are maybe not as attractive as in stocks. It's not 30-40% returns, but it's 7 to 9% return these days, even up to 10% return, which is way better than collecting a GIC return or letting the money sit in their savings account. Or even worse, a lot of people have tons of equity in their homes and they are sitting on them and they are not utilizing it, but they have cash flow issues.
So I think that that is important. I think that people think that they need $1 million cash
Yeah.
to invest when they don't.
No.
Talk about how someone who just owns a house.
Yeah. Somebody who owns a house. I'll give you a really live example. One of my really good agents in the past, I was discussing a business plan with him, and he mentioned that he has some need to contribute in his family cash flow because they are tight month to month. And I started just asking him general questions. I identified that their mortgage payment was very small. I'm like, why is that? He goes, oh, my parents have paid off the mortgage, and we have $1 million equity available in our home. And in fact, they also had a credit line available for 400,000, which was not used. So I asked him, I'm like, how much is the interest rate on credit line? He's like, at that time it was 3.7. So I'm like, what if we put your money, whatever amount you're comfortable with, in an asset which makes you 7 to 8%? So even you pay 3.5%, you still end up creating a cash flow. Long story short, took us a little bit of a time to convince the parents, but eventually we were able to move some money and build them $4,000 a month income extra to generate cash flow, positive cash flow from doing nothing. They didn't do anything, and we were able to identify something they didn't know. So I think a lot of people
off the equity in their house,
off the equity.
And with the crazy run up, everyone has equity at the moment.
Yeah, exactly.
Unless they bought in the last
6-7 months.
Yeah, they have crazy equity.
Exactly.
So someone could pull out 100,000, 200,000 even.
Yeah. Somebody can put 100,000, 200,000. In actually another thing which a lot of people don't know is RSPs. A lot of us have retirement saving plans, people who work with companies, and some of us have actually more money, $100,000, $200,000. You can't touch it. If you touch it, you pay a lot of taxes. So what we can do is we can actually direct those RSPs and invest into mortgages and actually collect 7 to 9% fixed return on annual basis, rather than letting them sit in a mutual fund, which you don't know. So that's another option people can do, where they can actually invest their RSP money, which is lying in a different account, and they can put it in a private mortgage.
I think that in the past, private lending, people have thought of risk. How do you feel as a risk level compared to stocks, compared to crypto?
Mm-hmm. I would say, like, yes, there is risk, but compared to any other asset class, I feel the risk is the lowest because there is a principal associated. And please keep it. I want to be mindful that it's not for everyone. Let's say if you only have $50,000, that's your life saving. We would not encourage you to put that there. That we would obviously do know your client, kind of run an exercise to understand if that's something you can afford to invest. We still say a disclaimer, like, you only invest the money you can actually afford to lose. That's a disclaimer we still share. But that being said,
on that topic, have you ever lost?
And knock on wood, we have helped fund more than 400 mortgages in the last 5 years, and we have had only one default. And that was because the client wasn't picking our phone. So and the reason why we have such a low default is we come from a mortgage brokerage background. So we understand how to assess the file, how to underwrite the file. And we also are very proactive in I won't say collection, but following up. So if any payment is missed, our lender gives us a notification. We reach out to the client. We find out why was it missed. How can we make sure it doesn't get missed next month? How can we help them maybe take out a little more loan if they have a problem? So staying proactive on those loans has definitely helped us. But so we have had a very good run with the defaults, none so far.
So just switching gears, currently rates are higher compared to the last year.
Mm-hmm.
What do you say to someone who says, I'm not purchasing now, I will wait a year?
Yeah. So again, like, I think my personal opinion is the amount of appreciation you get by holding a real estate asset is way larger than you looking at 2, 3, 4% of interest rate. That's what my opinion is. Like, if we look at the historical growth, like if you hold a home at 5% interest rate, then 8% interest rate for 3 years, over the 3 years, the amount of equity appreciation kind of significantly is way more than that 3% interest rate. Yes, it is a factor for a lot of people in terms of cash flow. But in a longer run, it always kind of makes up in equity appreciation.
Indeed, indeed. So there's another announcement coming soon on interest rates.
Yeah.
Do you think they'll raise them again, and how much? I won't hold you to it.
Yeah, I have been saying they won't raise this, they won't raise this. Finally, I've kind of made up my mind that they are continue to going to raise it, because like, if we really notice, the real challenge we have here is the controlling the economy. But that's why government is taking these measures. But it's not necessarily really doing a dent. Like, what I've been noticing is a lot of wealthy people are pulling their money out and sitting on the sideline waiting. It is not really affecting the large group of wealth. It's affecting the people who are at the bottom. So I think, being a little more pessimist, but I think the government is going to do another hike before the end of the year to kind of top it up, and maybe from there onwards they'll look at going down. But my prediction is it's going to go up again.
I think you may be right. Hopefully not that much.
Yeah.
Hopefully only a 0.5.
Yeah, we don't want that to happen, because a lot of people, the problem we are also facing is people who do get qualified, banks are asking them to qualify again, and that's where a lot of deals are falling through as well, where people who qualified at the previous rate, now they have to requalify, and now they can't qualify because the numbers were so tight. So it is creating a problem. But I guess, again, we humans in general, we evolve, we kind of innovate when there is problem. So I guess we will do that same in these environment as well, and come out stronger.
Switching to something more basic, let's just talk about pre-approvals.
Yeah.
I think there is a huge misconception on that.
Yeah.
People hear that they are pre-approved and they think it's in stone and they're all set.
Mm-hmm.
And I just love for you to explain that process and how you have seen it go wrong in the past.
So my opinion on that is, when you are working with a broker, so there is two scenarios. You're working with a
So
bank.
imagine they call up a bank.
Yeah.
And they get a pre-approval.
I used to work for a bank in the past, and the process for pre-approval at that time was very laxed. It's like run numbers, and whatever client provides you, and you just put it in the system. If the system tells you a number is good, you're pre-approved, which was a very lax system, because
no document
no
verification.
Nothing, yeah. So that we tell people, like, if they tell us, hey, I'm pre-approved from the bank, we joke with them that 8 out of 10 times you're not going to actually get approved, because you haven't provided the real information. So we see when brokers are helping clients with pre-approvals, they are able to identify way more obstacles which could come the way, and be prepared for that. When banks are doing pre-approvals, we have seen a lot of fall through in it. I think pre-approval, personally for me, it's a hook to just it's a marketing hook.
Exactly.
To get a client, and then if it works. If it doesn't work, please sir, you can go to the next bank or some other solution. But
then even if they have their approval in stone, it still needs an appraisal on the property.
Exactly. There are a lot of other factors as well, right? Like, because in reality, approval needs a property to be purchased, and when the property is not purchased, then there are a lot of factors which are not considered in that approval. So this always like a tentative approval, and the amount of pre-approvals not turning into approvals has been increasing significantly.
Really?
Yeah. That's so we are in a crisis management business. So majority of the business we do is with people who were promised a lot of things and they were not delivered those things. I would say 70 to 80% of our business comes from those clients, and hearing the stories, it's the same pattern over and over. It's overcommitment. It's like hooking them with the hook and then bringing them in and then disappointing them later. And it's a numbers game. It's like you bring in 10 people, you end up closing 3. You don't care about 7. And unfortunately, we have been dealing with those 7s, and we have seen this problem over and over.
So I would imagine there was a lot of people who purchased properties in February, and they were closing in May, June, and the appraisal came up way short.
Yeah, way short. Yeah. And then again, like the other disadvantage I see working at the bank is that the bank employees and the mortgage specialists are very closed. I won't say closed-minded, but they are very closed with the options they have. It's like just one option you can present, or maybe some banks have alternative lending you can present. But when you're working with a broker, there are multiple options outside the box. Like they can look into putting a small private, they can look into doing a whole private. Banks can't do that. So I feel like it definitely gives a client more options to deal with any unforeseen circumstances.
Amazing. I think that we covered a lot.
Yeah.
I wanted to keep it to mortgages, and then let's talk again about tiny homes
Sure.
and modular homes
Sure.
and mindset and all that kind of stuff.
Yeah, I'm very
Let's do that on the next one.
I'm very open to that.
Amazing.
Thank you very much.
Thank you very much.
Thanks.
All right, talk soon, guys.